Okay, friends, in today's video, we're going to learn to speak accountant, the language of accounting, and figure out what does your accountant or CPA or whoever you're working with mean when they say, did you prepare your bank reconciliations? What is that? So we're going to talk about how we go from our bank statements to our books in this video. Well, hello everyone. My name is Mike, the CPA, and one of my passions is sharing with others ways that we can become better at running a business. I'm sure you've heard of the saying, I wish they taught that in school. Well, this is definitely one of those instances where we really do wish this was taught in school, especially if we're in business school. But unless you go into accounting or take a bookkeeping class, you're probably never going to learn anything like this, but you still want to be a business owner. So this is a key foundational skill to learning the basics of accounting and how to help you keep your books up to date and why. We're going to cover why it's so important. It's absolutely crucial you do this. Every single person that I know who runs a successful business, I said successful, not a failing business, does this process. So that's what we're going to talk about today. Performing bank reconciliations is the foundation for helping you keep accurate records. And it's going to help you in multiple ways. The first way is it's going to help protect you from audit. Secondly, it's going to help you keep up-to-date information, financial information about your company throughout the entire year. So you're going to know exactly how your business is doing. That's huge. That is massive. If you don't know how your business is doing, how do you know if you're even having success or if you should change direction? Three, having reconciled your books is going to save you or potentially save you thousands upon thousands of dollars in taxes because you have taken the time to find all of your deductions. Four, if you have other employees or people helping you within your business who are maintaining some of this accounting information, preparing bank reconciliations, it's going to help you detect and prevent fraud because you're actually checking the numbers and making sure that money leaving your company is actually going to where it's supposed to be going. You'd be surprised how much fraud there is when business owners leave this kind of stuff unchecked. A very simple task, but people don't always follow it. Five, and most importantly for me, it's gonna make people like me, your accountant, your CPA, so extremely happy because if you come to me and you say, Mike, my books and records are not reconciled, there's not a lot I can do. Either one, I can help you do it, you can pay me to help you do it, or we have to have you go back and do it. Otherwise, we can't prepare your tax return or do any planning or do consulting. It becomes very hard to do anything if we're not working with good numbers. Do you follow me? Oh, and speaking of bank reconciliations and on the topics of banks, if you currently do not have a business checking account for your business, this process is probably going to be extremely difficult for you because your business activity is mixed with your personal activity. And I always suggest we keep those two things, your personal life and your business life, completely separate. If it's commingled, it's just going to take a lot more time to do this process. So if you don't have a business checking account, I highly encourage you get one. And I encourage you to watch this video if you have not seen this, because it is absolutely crucial to have a business checking if you want to try to run a successful business. And this video explains why having a business checking account is so important. So in plain English, what is a bank reconciliation? Well, simply put, it is the process of comparing your monthly bank statements from your business checking to your accounting records. Now, your accounting records, you might be doing them by hand, which I don't necessarily recommend, but you can, in Excel, in QuickBooks, in Waves accounting. So there's multiple ways you can do, prepare your accounting records. But what we're doing is we're checking the bank statement, and then we're comparing the transactions on our bank statement to make sure all those same transactions are in our accounting records. By checking our bank statements compared to what we have in our financial records or our accounting records, if you will, we are ensuring or helping ensure that we have not overstated our income or expenses because we're checking to make sure we haven't duplicated anything or if we miss anything, and we're checking to make sure we have not understated our income and expenses. So let me just say that again. We're checking to make sure we have not overstated income or expenses or understated income and expenses. By doing this process, you're going to make sure everything is squeaky clean. For some of the newer business clients that are coming to me, small business owners or people just really getting started in their business, what I typically find is when I work with clients is that if they've never gone through this process before, we often find them thousands of dollars in additional deductions that they didn't even know they had because they've never looked at their financial records this closely. If I'm working with a business owner who uses QuickBooks, and I love QuickBooks, I use QuickBooks myself, I always ask if their bank accounts are reconciled. And the reason is because if I were to just take their numbers at face value and I take whatever their profit and loss shows on the surface, and if I know they have not gone through this process, and if I didn't ask any questions or at least consider this, I would knowingly be preparing their taxes with wrong information, which means we would either overstate their actual tax liability or understate it. Either way is bad. Either way is not favorable for the client or for yourself if you're running a business. So that's why, or one of the reasons I asked this. Now, there's a lot of people out there. You have to watch out for them. If your accountant that you're working with is not asking these type of questions, you should really consider making a switch or bringing up this topic, because a lot of small practitioners, they won't take the time to do this because they will just want to grab your numbers, drop them in the computer like a data entry person and send it off. Doesn't mean your taxes have been done correctly though, because if your books haven't been looked at and reconciled, who knows what your actual tax return should have looked like. Many of my business clients are people who are trying to become full-time business owners, utilize QuickBooks. And I'm not talking necessarily for people who just have side hustles. They use QuickBooks, and QuickBooks, what's great is it has a very easy bank reconciliation process. It's not perfect, nothing's perfect, but it does a lot of the work for you, and you just have to make a few tweaks to it to get it to be just right, is what I found. But even if you use Google Sheets or Excel, you can still do a reconciliation process. And now what I would like to do is just show you a very, very simplified example of what a bank reconciliation is like and kind of the things you should be looking for when you're going through this process. Okay, so this is an example of a bank statement I found on Google. It's fake, but it serves the purpose for just kind of showing you guys what a typical bank statement looks like. Now, just pretend that this is a business checking. It says relationship checking, but just ignore that. This is typically your standard bank statement where at the beginning of the month, you're going to have your beginning balance. The credits usually mean deposits and additions, and debits usually mean withdrawals and, just like checks written, money going out of the account. And then ultimately we end up at our ending balance is the general format. Now, each bank statement is going to look similar but a little different, but that's the standard terminology on each statement. So let's look at an example on the screen of what this kind of looks like. I created this myself. Hopefully I've made it really simple so you can kind of understand what this process actually is. Okay, so what I've done is I've put this fake bank statement together for our example just in Excel so we can track with what's going on here. And let's just pretend that we're a business owner and we bank with ABC Bank, and it covers the period of January 1st of 2023 through the end of January of 2023. So 31-day period. So for 1 month, right? And this process, you're going to want to do this every month, typically, to keep your books up to date. After the 10th of every month, that's when I personally do this process for my own practice. So if I'm in February, it's February 10th, I'm making sure my books from January, all my numbers have been checked for the month of January before moving forward. In this example, we have a beginning balance of $50,000. We had deposits and additions of $6,000. We had electronic withdrawals, which is basically just money coming directly out of your checking account, right? Our checking account via direct debit of $515. Checks, there was one check written for $1,085. And we had bank fees of $25. That's just like a standard fee I'm throwing in here as an example. But at the end of the month, our balance, our new ending balance as of January 31st is $54,375. So if we look at a bank statement, it does show the detail. It breaks it out, right? So it shows our beginning balance. Then there will be a section of the bank statement that covers deposits and additions. If you've studied bank statements for as long as I have, you're going to start to notice these patterns and how each one has a standard format to them, regardless of the bank you're banking with. So deposits and additions, we see two different deposits at different dates, one for $3,700 and one for $2,300. We'll cover what that is in just a second. And when we have down here in our debits and withdrawal section, we have our EFT transaction. That's, like I said, money coming directly out of your checking account, like for a phone bill and things like that. So we do have on January 1st, AT&T, cost us $100 for our phone bill, as an example. We have Microsoft's subscription to their software packages. That's $15 a month. And then City Electric, let's say we have some utility bills that we pay for our business, which is $400 a month. I'm just making these numbers up for you guys. So that would generally be a high utility bill for a small business, but it just depends on the situation, of course. But essentially, and there was one check written to John Doe, and we're going to cover that here in just a second, but for $1,085, and then we have some bank fees of $25. So this is just, if we were to look at a bank statement, this is kind of like what the bank statement would look like, right? The different deposits and additions, subtractions, and so on and so forth. So now let's look at how that correlates with our financial records on another screen. Okay, so now we're going to look at the bank statement, but kind of how it gets transferred to accounting records, or how we can derive accounting records from bank statements. And if you have a business checking, that is a great thing to have, because all of your transactions should just be in one place and nothing's commingled with your personal finances. So it makes it really easy to go through this process. So let's scroll down here and let's look at deposits and additions. So we're just going to call these, for the sake of this example, usually money coming in your business is usually sales. So let's just say we made some sales. So we had $6,000 in sales, okay? And so if we're looking at how do we create a financial statement with that, well, that means we have revenue or sales of $6,000. And so we're making sure that on our financials, we reported sales of $6,000. We see that we have deposits of $6,000 and we know they're from sales, then we're good. That checks off. We have that. So we've reconciled that because those two things match, right? So now let's go down the line here. The next one, now everything else is going to be expenses for the business in this example. We know we have bank fees of $25 because we have bank fees down here. So excuse me, but bank charges of $25. So we're going to put $25 right there. So we have that. So that matches. These two match. We're going to check that off. And then contract labor, our payment to John Doe is contract labor. So that's how we're going to label that on our financials, because we know John Doe helped us do several projects. So contract labor expense of $1,085 goes there. Let's see. Okay, so that's our software and license fees. That's what that is from Microsoft. So $15 there. And then telephone expenses from AT&T of $100. And we have that, $100 of telephone expenses. And then City Electric would be utilities, right? Because that's our energy to power our business. So $400. We have captured all of our expenses, right? All of this. And we have also captured the sales. So if we take the total sales minus expenses, we get a net profit of $4,375. And interestingly enough, if you look at the change in cash at the beginning of the month, if we take the ending cash balance, subtract the beginning cash balance, we get a net difference of $4,375, and that just happens to be, in this very simplified example, our net profit. In January, we netted $4,375 in our business, and that's essentially how it works. Now, there are going to be times where you have deposits coming in from your personal account because you're trying to fund your business. So you take money from your personal checking and deposit it into your business checking. That deposit would be called the contribution. It would not be considered sales. So you would have to treat that differently. But essentially, in this very simplified example, that is the process we're going through. We're just making sure that everything in our financial records is actually showing up on the bank statement. And if we notice that there's any amount that's overstated or understated, by comparing the two, we can catch it. Now, if we haven't created any financial records at all, this is a good way to do it. This is a very simplified way to do it. Now, we still want to maintain our receipts, but at least you have something to go on. But in even better though, if as you're going along and incurring charges and expenses, if you're trying to keep your books up to date, then you should be able to already have something prepared that you can then check against the bank account when you get the statement in the mail. And these statements don't come usually until like the 5th of every new month, or the 10th, or usually between like the first 10 days of the month is when you'll get these statements. Now this is just for a business checking account. You would want to do this process for every single cash account that you have, and you would want to do this process for every single credit card account that you have in your business. So that's why I always suggest use only 1 or 2 business checking accounts typically, if you can get by with that, and 1 business credit card. The simpler you can keep it, the easier it is to all maintain until your business grows to where you need multiple accounts, multiple credit cards and things like that. But hopefully by then you can afford to have somebody helping you so you can spend the time growing your business. So that's essentially the reconciliation process. Is you're comparing the bank account, the bank statement, you're comparing your bank statement against what's in your financial records and just making sure that everything is matching on both sides so that you know you've correctly captured all the activity. Okay, ladies and gentlemen, you now have an idea of what bank reconciliations are and why they're so darn important if you're trying to run a business. And we've covered a multitude of reasons. Now, clients that I work with, I do this for some of my clients, they pay me to do this, and for others, they want to learn how to do it themselves, so they pay me to teach them how to do this process. So these are all things though, if you're a business owner, you should really, this is one of those skills that you really should know. There's a lot of things you don't need to know. This one is one of the ones that's a must in my opinion. And I'm telling you this as a CPA, that if you don't get this down, this is a major weakness in your organization. Now, it's okay if you pay somebody else to do this. That's totally fine. But just make sure somebody in your company is doing this, whether you're using somebody internally or paying somebody outside of your company, to make sure that your records are up to date throughout the whole year. Because if your numbers aren't good, all the important things like taxes, planning, strategizing, consulting really cannot be done because the numbers are just not good. You got to make sure this is a very basic thing, but it's basically the launching pad for everything else. Your books and financial records are the foundation for everything else to grow your business to the next level. All right, everybody, thank you so much for watching. If you liked the video, please be sure to drop a like. It really helps out the channel and helps spread the reach of this video. Leave a comment below, questions below. I love interacting with everybody over YouTube, and make sure you subscribe for more videos on mastering business, accounting, taxes, money, and more. All right, have a wonderful week, and I'll see you all in the next one. Peace.